Welcome to this episode of the Legal Paige podcast. Today's episode is all about getting ready for the end of the year with your business tax deductions. And I am honored to have CPA Atiya Brown with us here today. Atiya is a CPA, CA, and certified financial educator instructor. She has over 15 years of experience in the accounting and finance world. And Atiya attended the John Molson School of Business in Montreal, Canada for both undergrad and graduate studies. She finished in the top 5 of her graduating class before completing the Chartered Accountancy examination to become a CPA CA. And Atiya is now the creator of The Savvy Accountant, where she specializes in helping small business owners maximize their financial position and position them for growth. She is certified in both Canada and the United States and has particular expertise with the real estate industry and small business owners in general, and is their go-to accounting and tax advisor. I am so excited to get into this episode here today, all about business tax deductions for you all to get ready for tax season and filing taxes at the end of 2021. So let's get into this episode, Legal Pagers. You're listening to the Legal Paige podcast, where we chat about life and business with a legal twist. I'm Paige, attorney and photographer helping online businesses and creatives tackle their business dreams without breaking out in hives. No more legal mumbo jumbo. This podcast features simple, bite-sized advice that'll have you legally legit in no time. Are you ready? Let's get started. Hey, everyone. Thanks so much for tuning in today. I am very excited to have Atiya here to help us as we approach the end of the year. And she's going to educate us all about business tax deductions. Welcome to the podcast, Atiya.
Thank you so much for having me. I'm happy to be here.
I am overjoyed, and it's so nice to have lawyers and CPAs talk together on a podcast. I think it's everybody's favorite time, as you and I in particular. But honestly, our listeners really, really love it when other professionals come on. So I would love for you to give a little bit of insight into who you are and kind of your business journey to where you're at now.
Awesome. So my name is Atiya Brown. I'm a CPA by trade. I'm licensed in both Canada and in the US because I'm originally from Montreal, Canada, and I've been in the US for about 13 years. And I love all things taxes. So I started The Savvy Accountant about 4 years ago because I have a passion for taxes and teaching my community more about taxes, because I realized that we didn't know a lot about taxes in general. And so taxes are my jam. I love discussing ways that you can be proactive. So tax strategy is really where I focus so that you can plan ahead, because I believe that you can save a lot of money when you're proactive rather than being reactive when it comes to your taxes. So yeah, I'm happy to jump right in and talk about best strategies that you guys can look for, you guys can be implementing since it's the end of the year, so you guys are ready for tax season.
Amazing. I love that you said I want to teach people how to be proactive rather than reactive. That's something we say here at the Legal Page too. So solid tagline, because we're constantly telling people, like, you don't want to react to legal issues. You want to proactively prevent them in contracts and your client communication and things that you do. And it's the same for taxes, you guys. How to be proactive here. At least we have a little bit of time towards the end of the year to get things done by December 31. I'm sure there's a few things that you can do at the beginning of the year, but that's always kind of honestly bitten me in the bud a little bit, where I'm like, I wish I would have done that last year and now I can't take that deduction, or I wish I would have known about it. And so, yeah, just being a little bit more proactive tax-wise is really important as well. So I love that you said that phrase. Let's just get right into it, preparing for the end of the year, business tax deduction-wise. Can you just start off by taking us through like a few tips and tricks that you believe all business owners should do right now as we're quickly approaching the end of the year?
Yeah. So I like to tell people, when it comes to your taxes, organization has to be the top of mind. So you want to make sure that you're organized throughout the year, or that you can get yourself organized so that you're prepared for taxes. So organization is going to always be the forefront of what I discuss when it comes to taxes. So because we're at the end of the year, you want to make sure that you get organized over all of your expenses, everything that you paid for your business. I want you guys to understand that in order to be a valid deduction for your business, you want to answer the questions: is it ordinary and necessary for you to run your business and incur a profit? So if you can answer yes to those questions, then chances are it's a valid deduction, and you're going to want to make sure that you are tracking that so that you can apply it to the income. Because as we know, the government they're going to tax you on the income that you generate, right? So their onus is on the revenue that's generated. Your onus is on the deductions. So you need to make sure that you're applying deductions to that income. So that's going to reduce the amount of taxes that you have to pay on the income that you earn. So what does that look like? That looks like making sure you have a process in place that's going to calculate all of the deductions of everything that you spent. So whether that is for marketing, whether that is for contractors, which is another very important factor, you want to make sure that you're tracking everything that's paid for contractors throughout the year. And you want to tally them up to make sure that you have all of your ducks in a row. You want to make sure that you have all of the proper invoicing and all of the proper receipts for these so that they are valid deductions come time to actually file. So getting organized with your deductions is the first thing that I want you guys to do. And the second thing is I want to make sure that you guys understand what type of deductions you should be actually applying and recording and making sure that they're categorized. But organization is going to be the first thing. So whatever it takes for you to get organized, you know yourself best. But if it's going to take for you to spend a day and going through your statements, that's what you need to do.
I love it. Yeah. I mean, I used to obviously do my own bookkeeping back in the day. I think we've all started there as solopreneurs. It just makes sense, right? Because we wear 80 million hats in our business, even, obviously the accounting hat and then the lawyer hat. And so you do just have to take those extra kind of back end business days out of your weekly schedule to work on things like taxes and prepping and just getting organized in general. Do you have any apps that you would suggest that people use? I use QuickBooks, and I don't know if you suggest anything other than QuickBooks for people if they are having a hard time kind of just working through their statements on their own.
Yeah, so QuickBooks is definitely a main one that most people know about. There's also Xero. So Xero is another platform that you can use for cloud-based accounting. And so what it's going to do, it's going to attach to your accounts the same way that QuickBooks was, and it's going to tally your transactions so that it's all in one place and easier for you to see the transactions. The difference with QuickBooks and Xero that I like to tell people is QuickBooks was really created for accountants by accountants. And so the purpose behind QuickBooks is really an accounting software. So they're going to talk debits and credits. They're going to talk journal entries. And a lot of regular day people, if they're not in the accounting world, they might not know what those mean. And QuickBooks is a balancing system. So if you enter something incorrectly to the wrong account, it's going to balance. So you're not going to see a flash saying this is wrong. So QuickBooks might not, while it's the most known, if you are not familiar at all with the financial world, I would think that Xero would be a little bit more user friendly because they use lingo like who did you pay? What did you pay? And so it kind of triggers you to think in that sense. And it just reduces the mistakes that you might make because they're so user friendly. But QuickBooks and Xero, those are two main ones that I typically recommend for you to track your expenses.
That might be the biggest nugget and takeaway for people in this episode, because I do think people talk about QuickBooks too much. And from a user of QuickBooks, that I think I took maybe 2 accounting classes. I would have no idea how to use QuickBooks if I didn't have any business classes in my background. And I'm an economics major, so I took a lot of math classes as well. But I have talked about this with lots of TLP customers and the TLP community where they're, they're creatives for the most part. And they don't, they don't need to know what debits and credits and all of these balancing words are. It's super confusing. So I'm glad that I asked you that question and that you told everyone about Xero. So definitely go get that, you guys. If you just need some app help with kind of preparing and organizing. Obviously, at the end of the year, it's you've kind of done what you can do up to that point in terms of deductions. But I'm sure there's like a few that people should remind themselves of before December 31 hits that they could take. And I love your advice on that, especially with what some people tend to think they should expense at the end of the year. And they're just trying to like reduce their profit overall versus things that actually make sense as deductions.
Yeah. So this is a question that I get all the time. And I always tell people that it's funny because I'm always like, I'm going to give you the legal answer and say it depends, because no situations are quite the same. But I do like to tell people that when it comes time to trying to tax plan, December is typically too late. So unless you're working with somebody throughout the year and they understand your situation throughout the year and you guys have been putting things into place, December is really going to be where you see a lot of people scrambling to get added deductions. So they're going to pay for things in their business because they're cash bases. They're going to pay for things that the business needs in the last month so that loads the deductions. So that is a way that you can do it. But I like to tell people to, just really consider what you're actually doing. If you do need these items that you're purchasing and you can purchase them in December, then yes, that does help you. But you're spending money to save on taxes, but you need to really outweigh, is this a benefit that's going to you're actually going to see a benefit? Because if you're going to spend $10,000 just to save maybe $2,000 on taxes, I don't know if that was really the best way to use your $10,000 in cash reserves. So it really depends on your situation, and hopefully you're not waiting till the end of the year. But there are things that you can do in December. So if you are, giving for charity, that's a time where you can add up and see what reserves you have, and you can donate to charity in December, and it'll count for the whole year. And because of the situation that we're in with the pandemic and everything, charitable contributions are actually increased for this year. So if you do have cash reserves and there is a charity that you want to donate to, that would be a good time to do it. And you can also, getting into different strategies depending on your family situation. If you have children and they've been helping you in the business, this is a time to make sure that your ducks are in a row and you have hired them properly in the business if you actually want to go the route of hiring your children in the business. So that's something that you want to make sure is in place before December so that you're ready for that deduction at year end.
Those two are perfect. And I think people don't think about those as much in December. But I agree with you. Everyone needs to really understand what they're doing throughout the entirety of the year. If anything, you guys, December is really a good time to like check yourself and be like, did I do what I needed to do tax-wise throughout all of 2021? And do I need help next year? Like just project, like, do I need a financial advisor? Do I need someone to kind of look through what my business is doing? A lot of people in the TLP community are we have lots of creatives and online business owners, but we also have a lot of people in the wedding and event industry. And this year in particular is going to be really interesting for people tax-wise because last year was already a nightmare.
Yes.
Everything that happened with the pandemic, and they just obviously didn't have the income that they had previous years. And then this year's about double or triple, I would say, for lots of people that I've been talking to because they were bombarded with clients and they had to reschedule everything. And so maybe this year, when you guys are, we like to call it kind of, off season. If you're in the off season or you have a little bit of extra time to kind of project, okay, this is what 2021 looked like. And that's what Atiya is saying here, like getting everything in front of you in terms of organization and being like, oh, I should have done something, differently in Q1 or Q2, or I should have prepared, for this large equipment expense earlier on in the year. That is where you can check yourself and say, I need to outsource this kind of help. Do I need to get a bookkeeper? Do I need to get like an actual CPA in my hometown on board that knows like my state tax laws as well? Do I need to get a financial advisor on board? I have all three of those people in my business and they've been lifesavers, but it has taken time. Like I understand that's just not something that people can they have disposable income or they can expense that monthly in their business. They're just not ready for it yet budget wise, but it's something that I hope you guys all can get to that point where you're outsourcing that kind of professional help tax wise, legal wise. And like Atiya said, sometimes December is just too late, honestly. Speaking of too late, I think a lot of people start expensing equipment and like furniture and like things for their home office other than charitable deductions. I love that idea. What do you think? What is your take on big things for your business that are expensed? And how does that work depreciation wise for business owners? Because I think they forget about that.
Yeah, so when it comes to depreciation, that's something that's written into the tax code that's going to give you a benefit of writing off, having an extra deduction in the year that you actually don't have the cash outflow. So when you buy equipment, when you buy furniture, you're going to get to depreciate that over several years as opposed to expensing it in the year that you purchase it. So there's a lot of tax changes that happen with the amount of years and how much you can write off in the year that you bought it. And so a lot of people are writing off everything in the year that they buy it. And so if you qualify for that bonus depreciation and you get to write it off in that first year, then that's great too. The thing with depreciation is that a lot of people don't realize that with depreciation, there's something called a recapture. And recapture comes into play if you sell that asset later on down the line. You actually have to take that into income. So a lot of people are quick to want to depreciate items, but they don't really know what the other side of depreciation is. And typically the other side of it is because they gave you this added deduction every year, but it wasn't something that you paid for in that year. So that you kind of have to recapture it up until a certain limit and take it into income in the year that you sell it. So depreciation involves a lot, but it is a tax benefit that you get when you buy certain assets that you're able to write them off over several years.
Gotcha. And is there anything you mentioned in there, one thing regarding if you qualify for the deduction to just take place in the year that the cash came out of your account? Can you talk about that a little bit more? Is there something that people can do, like equipment wise, that would qualify, that wouldn't have to be depreciated and could just be that cha-ching moment in December?
Yeah, so it's going to actually depend on the time of year that you purchase the asset. So a lot of people think that you can purchase something in December, for example, but depreciation rules, they matter. They come into play of how long you've held the asset. So you might not be able to get the 100% depreciation because you bought it in the last quarter of the year. And so they like to spread it out to make sure that you aren't just piling on purchases so that you can deduct the full amount. So you might be limited to what can be deducted when you buy it in the fourth quarter of the year.
Gotcha. Super helpful for people because I do think that's like a big misnomer.
Yeah. That people don't know that that's there. Exactly.
Yeah. People don't know. What about what other, is there any other deductions? I know like lots of people talk about home office deductions if you don't know about that. And that still applies now. Has there been any changes to the home office deduction at all, or things related to people who are now primarily working remotely or working at home?
So right now we're in a funny stage because there might be another tax upheaval that happens. Hasn't happened yet, but with the reform that happened the 2017-2018 year, home office was actually reduced to just small business owners. So if you have side income that's not from a W-2, then you're able to qualify for the home office deduction. So if you're an employee that's paid on W-2 that has to be working from home because of the pandemic, that law, it took place before the pandemic happened, but you aren't able to claim that home office deduction. Certain states still allow a home office deduction, but at the federal level, that was taken out. And so it's only for if you have a gig economy, if you have a small business and you have active income sources coming in that's not from a W-2, then you're able to have the home office deduction. And I wanted to talk about the home office deduction because a lot of people feel like that's like a red flag. If you qualify for the home office deduction, and as in you have a business that you're doing and the administration part of it is happening in your home, you're able to qualify for the home office deduction. And it's not something that's going to trigger an audit. And as long as you follow the rules and you do have a business that you're running, then you should not be afraid to take the home office deduction. It's a deduction that's going to help you reduce the taxes that you have to pay. And so I know a lot of people are afraid of it. They think that it's going to trigger something. As long as the expenses are valid and you're claiming the proper square footage, so you have a space designated for your business, it can't double as something else. So unfortunately, your dining room can't be the space that you have because it doubles as a dining room.
Mm-hmm.
But if you have the space designated for the area for you to do your business, you can claim the home office deduction. So that's something that I think a lot of people miss out on because they're afraid of an audit or they think that it triggers an audit. But it's a valid deduction that's written into the tax code. So if you qualify, you should definitely take advantage of it.
Love it. Yeah, I have a home office and I love having a dedicated space in my house for it. And it's also like it kind of solidifies for me that deduction is completely legitimate. So for everyone else. And I you can correct me if I'm wrong here, but I've heard like as long as you kind of have like a desk area, if it's in even a room that could like the dining table may be utilized, in that, I don't know, 15 by 15 room. If you have an area of that room, you can still take the square footage of just that area if it's like a desk and it's a dedicated space for your business. Is that correct?
That is definitely correct. So it just has to be a designated area. It doesn't have to be a full room. It just has to be the space that you are doing work in. So like you said, if you have a desk and it's cornered off in one of your rooms that you're using, that space is what you would calculate as the space for your home office.
Super helpful to clarify that. Anything else? I know mileage is a big one for people, and usually businesses, solopreneurs know to take either, your actual mileage, track your actual mileage, or just take the flat deduction. Is there anything else that people are usually writing off as deductions each year?
Yeah, so mileage is a good one. The home office is a good one, and personal use items. So it does take a little bit more organization and for you logging it, but your cell phone. So a lot of people, they're doing business from their personal cell phone as opposed to having a business phone that they can write off because it's a business expense. They can write it off 100%. So when you have a personal use item, you now have to make sure that you're using it for more than 50% of time for the business, and then you're able to write off certain expenses that are personal use. So your cell phone is going to fall into that. So that's just an added deduction that a lot of people forget because they have a cell phone and they're using one cell phone. And if you pay for any of those apps that you can use, there's certain apps that you can use your cell phone, but you're using it for business. So it's going to ring to let you know that it's a business phone call. Those expenses are going to be able to be written off. But you did mention something that I didn't want to forget to come back to. So when you were saying that everybody can't afford to have a CPA on their team or a lawyer on their team, I always tell people that there's nothing wrong with DIYing, but you want to make sure that you at least have a consultation so that you can understand your situation and know what you should be preparing for. Mm-hmm. So while you might not be able to afford to have them on retainer, you still want to make sure that you have a meeting with them at the beginning of the year. So if you look in December and you're like, you know what, I probably missed out on a few things because I wasn't planning, schedule a consultation for the beginning of the year so they can at least help you what to look for throughout the next year so that you can be better prepared, even if they're not working with you on a month-to-month basis.
Yeah, absolutely. And I think that's good for people who have just started their business as well, because maybe your mental block is, I can't afford it, which is kind of what I was projecting there. But also I have heard from myself and other lawyers and other CPAs, you can't sometimes not afford to have them on your team. I'm going to be really honest with you, because at the end of the day, if something goes wrong with taxes, you're going to have to hire a CPA anyway. Hey, legal pagers. As you know, we are talking all about taxes in today's episode, but I also want you to go through your existing contract at the end of the year. So I wanted to be sure to share a freebie with you that is going to help you pick out the best business structure for you and your taxes if you haven't already done so this year. You can download your free guide today at thelegalpage.com/business structure guide. Again, that's thelegalpage.com/business structure guide, all lowercase. I am going to help you walk through how to select either a sole proprietorship, a limited liability company, or an S corporation for your specific business structure. And Lo and behold, we're going to also discuss the tax implications of each structure in this free download. So again, download your free guide today at thelegalpage.com/business structure guide. Okay, now back to the episode. One thing I always like to reiterate when I talk about like hiring a lawyer and hiring an accountant as well is the reason that it's really beneficial to you is because we have professional liability insurance for these kind of things. Like we were actually trained to do what we are supposed to do. Like you're just like quasi wearing the hat as a solopreneur and trying your best to figure it out. But at the end of the day, if something goes wrong, like all that liability falls on you. And if something were to go wrong and your CPA is filing your taxes for you, they have professional liability insurance for that. So you're like double backed there. Like it's they are liable. And then, you know, if something happens with taxes, you're hiring a tax lawyer. I think people forget that. Like the lawyers are the ones that go into court with you and, you know, are helping with the audit or any, you know, transgressions that are happening on the state level, IRS level. And then with lawyers both of us are professional expenses. If you want to talk about that real quick too, because that leads into deductions. I think people forget that that's actually a really good expense to take every year is professional help, because from my understanding, it is 100% deductible.
Definitely. It's definitely going to be fully deductible what you pay for us to do whether it's just for the compliance fee, so just the tax prep filing, or whether you're paying us for the strategy and we're coming up with a whole plan for you on how to reduce your tax liability. That's going to be a valid deduction for your business. So professional fees is something that you want to definitely make sure that you are maximizing when you can, because like Paige said, the legal fees, the CPA fees, these are all for your benefit. And it's basically an investment for your business that you get the tax benefit of having the deduction.
Yeah, I also say it's like an additional insurance for your business.
Exactly.
People are like, oh, I have to get insurance. They're like checking all the boxes of like what they need to do as, you know, first-time business owners. But then they kind of forget these other things. They're like, oh, well, there's so many resources out there, and I get it. There's so many apps. There's so that you can Google to your heart's content and go down rabbit holes on what to do. But at the end of the day, that's why I always say like, just get someone to give you the advice that can legally and professionally do so, because then you're putting that, like you said, onus on them. It's in their hands and it's not in yours anymore. And that's going to be a huge weight off your shoulders. And it's not something that you should be doing yourself. So at the end of the year, if you're feeling that weight and that pressure of all of these roles in your business, it's probably time to outsource. And I think professionally, outsourcing CPAs, lawyers is the best way to go. I mean, people outsource medical help like it's going out of style. And I find it very interesting that people will always they will never pretend they are a doctor.
Yeah.
But they will pretend that they are an accountant, and they will pretend that they are a lawyer. Like your friend gives you legal advice and you just take that point blank and run with it. And I'm like, this is so interesting. If my friend was not a nurse or a doctor, I'd be like, okay, well.
Yeah.
So yeah, I think that's a good deduction as well. Any other thing that you want to wrap up this episode with, like your last quick thoughts for people as they're nearing the end of the year, they're starting to think about filing 2021 taxes. And then I don't know if there's any tax laws that have come out in 2021 that people are unaware of that you just wanted to like point people to and talk to their CPAs about if necessary.
All right. So there's about 3 things that I want to touch on. So the first one that we were just kind of talking about, and I didn't want to miss it, is that while you might feel like you don't have the funds to actually work with a professional right now, I want to caution you. And every time I say this, I cringe because I hate making it seem like you have to, but it costs more to fix a problem than it does to set it up correctly the first time. Mm-hmm. So while you don't want to spend the money now, if something does happen and something needs to be fixed, the bill is going to be a lot higher then. So that's something that you want to consider as you're running your business, because that's going to apply with the legal side as well as your financial side. When it comes to any laws that have changed, so is a big one that people keep talking about now, but it's really not a real change. So if your side business earns $400, you're considered self-employed and you're required to report all sources of those income. So that's always been the case. If you are the payer and you pay someone over $600, you are always required to complete a 1099 miscellaneous form or a 1099 NEC form for a non-employed compensation. That has not changed. So the $600 limit for you to file those tax forms has always been the place. Third-party vendors such as PayPal and Stripe, their limits were a little bit higher. So they had to issue a 1099K, and they would issue that for anybody who made over $20,000 on their platform and had over 200 transactions. So as you can imagine, they wouldn't issue 1099Ks for everybody because not everybody hit those thresholds. Well, under one of the recent changes, that $20,000 threshold was reduced to $600. And so what that means is that those third-party payment processors, Stripe, PayPal, and now Cash App, Zelle, Venmo, they now have to issue those tax forms for any person that incurred over $600 on their platform. This caused a whole upheaval because I feel like a lot of people thought that meant they're going to get tax forms and now have to pay taxes on this income. When in reality, all this changes was the compliance side. So it's just the reporting. You were supposed to be reporting those income sources the entire time. So this really shouldn't impact a person filing their taxes at all. But it did cause a whole bunch of uproar because I really think that a lot of people, if they weren't getting that tax form, that 1099K, they weren't filing that income. And so that's the problem. So I want to make sure that you guys understand that if you make over $400, you're supposed to be reporting all of those sources of income. So
yeah, this is a big. I was wondering if we were going to touch on this in this episode. Literally, my group has been blowing up surrounding 1099Ks, and I have researched a lot about it. And I understand. I understand some of the issues. Like there is some legitimate concerns, and in some states. So to clarify as well, a lot of this isn't happening till 2022, you guys, for many people. But some states have implemented this law and are accounting for this for 2021. So there's nothing you really have to do at the end of the day besides you're going to get a 1099K from PayPal. Like just deal with it. You're going to get one. The issue comes with double reporting income. And I'm sure you've heard about this, where I think solopreneurs are not being, and freelancers are not being clear with the people that are hiring them that I'm already getting a 1099K now, so you don't need to issue me a 1099 NEC, because then it's like you've got double forms. And here's the deal. This is what Atiya is saying here. If you have a CPA, they're going to figure this out for you. That I always try to tell people this. Like I'm not putting myself up on a pedestal, but I'm saying like, my CPA does this. So it's not an issue for me because we have all kinds of contractors and we're paying tons of affiliates via PayPal. And I mean, this is probably impacting my business more than a lot of other businesses. They might have like small people that, like small transactions. But at the end of the day, my CPA is looking at like, is this income being double reported? Then we just need to file the 1099K.
Exactly.
And so you just don't want to file both. And that's where people got into trouble is, and I don't know how, because it's just came up to reduce the amount from, it was 20,000 and 200. So it was a conjunctive thing, which means you had to have both, you guys. This is also something we're trained in as accountants and lawyers. And now it's just $600, which makes sense because the economy went online and like the government is always like 2 or 3 years behind, in my opinion. They're like, we're missing out on, and like, we're missing out on taxes. People aren't reporting correctly. They're finding loopholes. We need to reduce this amount. And gig workers are just getting paid, like you said, we all do, through Venmo Business now. hopefully, if you have not heard about my Venmo business rant, you need to go listen to it. That's a whole podcast episode. And, PayPal as well is one of the big, third-party payment processors that we all use. And the government just finally realized people aren't reporting this income because they're not getting any forms and there's really no way to track it. And now they're like, okay, we can track it. And again, this isn't you. You don't have to do anything. These payment settlement entities, PSEs is what they're called under this new law, are going to send these 1099Ks to you. So again, I'm really glad you brought this up, Atiya, because it goes back to the heart of the matter here that we've talked about multiple times on this episode. Get an accountant to help you. Because if you're really confused and by January 31st of 2022, if you have a ton of NEC forms and K forms, you have to get an accountant at that point because I don't want you to mess it up. And I have heard that people who are getting audited are technically only paying taxes on what they think, was their actual income, but then they over-reported their income essentially, but they paid less taxes. And that's when you're going to get an audit because IRS is going to be like, wait, all these statements say that you made way more and you didn't pay taxes on all of that. And then they have to go back and then they're getting audited and it's just a hot mess. So just don't put yourself in that position. I just wanted to say that. Yeah.
No, I agree. And because a lot of people don't understand that the government is going to get the other side of those tax forms. Yep. So that's where the discrepancy is going to come in. So that's why you need to make sure that you have the checks and balances in place so that you're reporting everything correctly.
Yeah. And if, again, the 1099 NEC forms as well is there as kind of if it's not captured now with this law, if it's not captured in a 1099K, it needs to be captured in a 1099 NEC because then the government can still track it. Exactly. But if the payment settlement entity is issuing a 1099K, then it's being tracked. So the company that hired you or whatever as a graphic designer is already going to expense that amount to you. And then the 1099K shows that you did receive that income via the third-party payment platform. So again, you can tell. I'm telling people right now too, Atiya, and I'm like, it's so funny you brought this up at the end of the episode because it's just been nonstop in my DMs right now. Set yourself up for success here at the end of the year and send out an email to your clients, kind of explaining this in your own terms and, explaining to people, if you do have everyone paying via Venmo business or via PayPal, explain to them, I should be receiving 1099Ks. So you do not need to be issuing me a 1099 NEC. And also work with your accountant as well and alert them to this so that I'm not having all these double forms come my way at the end of the year. So you can proactively tell your clients what's probably going to happen and then touch base with them again in January. So December and January, I think, are going to be really critical at the end of this year for people to figure out compliance with this new law, essentially.
Yeah, but it's been a doozy this past several days with this new change. And I also think the whole proposal of the $600 bank account tracking is causing a whole other uproar. But that's just a proposal right now. And so we aren't sure where that's going to end up.
Yeah. And I've heard you're talking about from bankers.
Yeah.
Yeah. And I've heard from bankers as well. I had a couple people reach out to me that work in banks. It actually might help these bankers with compliance because they already have to do certain reporting things for a certain amount of transactions. Yeah. And I think they're also trying to capture wire transfers, which makes sense, that are for business purposes. So I get what's happening, and I know that there's an uproar here with, this threshold. It's all these threshold changes. So just again, I guess my best advice, and Atiya, probably you as well, is get help if you're confused. Yep. If you're confused, get professional help. And we're all trying to kind of navigate this as well. Obviously, we're all talking about it because Atiya and I are on a rant here. And It's in the forefront of our minds. We have lots of resources that you guys don't, in terms of people who are actually experts in this field, people who have, been in the legislation rooms, those type of things. And so we're getting, I think, the information quicker. And also accountants and CPAs are going to be extremely well-versed to the best of their abilities by tax filing deadlines for all of these things. So they should be able to accurately do this for you, or to the best of their abilities, and use their due diligence. And then, like I said, just put it on them. Like, if you're really confused with all this freelancer, gig worker, 1099 BS, honestly, don't do it yourself. That is the first thing. Like, we're going to tie it all up with a bow here. Be proactive here and find yourself help versus reacting to an audit later on.
I agree.
And I think you had one more thing after our 1099 tangent.
Yeah. So it flows into the be proactive. So I'm going to bring that word back again, get organized. Organization is going to help you be proactive so that you don't have to get reactive to a situation that you could have prevented. So organization, being organized is always going to help you when it comes to your tax filings.
Perfect. I wanted to wrap up here with receipts. Do people need to really keep all of those and, conjure them all up at the end of the year, or can they just use bank statements, that kind of thing? Because I think people worry about that in December as well.
So a lot of people need to understand. So in order to be compliant, so to file your tax return, bank statements and credit card statements, those work for your filing. So for you to be compliant, statements are okay. The issue comes in, should you get audited or they have questions, statements don't suffice. So you need the actual receipt. And so what I recommend people to do, now that we're in the cloud-based world, you want to scan and take pictures of all of your receipts and have a folder so that you have everything organized, so that you don't have to just keep random receipts. They don't make paper the way they used to, in my opinion. So all of your receipts end up fading anyways. So keeping them all in a shoebox is not going to help you, because they're most likely going to fade. So get into the habit of writing down, if you go for a meal and you're taking a client, writing down who you had the meal with and what you guys discussed. Take a picture of it and then file it in your cloud-based system. Because if you keep that receipt, it's most likely going to fade and you're not going to be able to use it should you get audited, and then it'll get denied anyways. So get into the habit of using the resources that are around us. And right now, everything is cloud-based. You're able to take pictures. If you work with QuickBooks, you can scan the picture, take the picture, and upload it to the actual transaction so that it's going to save itself there. So just make sure you're being organized with all of your deductions.
Very helpful. Yeah, you have to be your own accounting department as well, everybody.
Yeah.
And it can be cumbersome, but like Atiya said, it's worth it in the long run. And like she said, everything's cloud-based, everything's online. So if you're receiving receipts online, I always tell people the end of the year is a good time to get organized and give yourself a folder in your email account that's for miscellaneous receipts that are getting sent to you digitally. So you don't just have to go scour through all of your emails to find those. Yeah, I love all of this. This was so helpful. And I think people learned a lot in this episode. Atiya, I love to kind of end episodes with just a quick rapid fire question so people can kind of get to know you on a personal level a little bit more. So are you ready?
I think so.
Okay. What's your current favorite beverage of choice right now?
Cranberry juice.
Oh, yum. And are you munching on any type of food lately?
I love chips. So any spicy chip.
Always good. A Netflix or Hulu or Amazon Prime TV show or Apple TV show that you are binging?
We just finished, what was the name of it? Clickbait. So that was good.
It was. I watched it too. It was really good. I'm also into Ted Lasso right now because it won a bunch of Emmys, and I was like, fine, I'll watch it. It's really good, you guys.
Is it? Okay.
Yeah, it's really good. So Clickbait and Ted Lasso. Do you have a particular type of music or artist that you listen to a lot that you love?
No. So I don't. I'm really the radio person. So whatever's on the radio,
Love
that's
it.
what I'm listening to.
Yeah. You're like, give me what is happening right now and is on tap on the radio. I do not have time to think about any musicians. And what was your favorite part of summer 2021?
Favorite part of summer 2021, I guess, was our move. So we recently moved, I want to say halfway across. So we went from the East Coast to Texas. And so that was pretty cool.
Nice. Yeah. Awesome. Well, I hope you have a great time in Texas. I've heard it's a good place to move to. Lots of people have moved to Texas this year. So there's been a lot of moving in 2021 as well.
There has
so that is a highlight. That's a good highlight of the whole year, honestly. Well, Atiya, where can people find you and learn from you and get other valuable resources from you? And then, of course, hire you if they need to for financial, advising purposes.
Yeah, so the Savvy Accountant across all social media. So you can find me on Instagram, Facebook, Twitter, the Savvy Accountant. And you guys can schedule a call and let me know what you are needing help with so that we can get started. But yeah, if you send me a message, you'll get a response from me on social media.
Perfect. And thanks so much for being here, Atiya, and taking time out of your day to help us all.
No problem. Thanks for having me.
Thanks so much for listening to this episode of the Legal Paige podcast. See, I told you being legally legit isn't so scary. Be sure to visit thelegalpage.com for all show notes. And it would be super awesome if you could head over to iTunes and leave a review. Last but not least, don't forget to join my free Facebook group for unlimited legal and biz Q&A. Chat soon, Legal Pagers.